Good afternoon. It's Chris Brecher with the Simpler Trading / Chart Patterns Mastery free video, October 22nd, 2024. Can't believe it's only a couple of months till Christmas. Holy cow. So what are we watching in here? What we're watching in here is I look for tells. Any tell I can find. So the first tell I want to show you is earnings season. There are two things that have stuck out in earnings season. One of them is when you get more puts than calls, a lot of times those stocks that have more puts and calls sell off. Now, the problem is the ones tonight just didn't have it. But I just wanted to show you an example. Why is this true? Because what happens is the Robin Hooders, the public usually buys calls. That's all they know how to do. But the people in the know a lot of times buy the puts. So as you see, everyone that had a high put call ratio went down. Pretty interesting. Pretty interesting in there. So just keep that in mind. It didn't work tonight because there just weren't that many that were exciting. Texas Instruments and Starbucks actually had more calls and puts, even though one went down, one went up. It was a non-event. But I wanted to show you that. That's one tell for you. Here's another tell. I've gone over this over and over about sentiment. And I don't take sentiment just at face value. So you have the extremely bullish sentiment on StockTwits right now. That's a lot. Extremely bullish, the highest I've seen it. But you can't just take that as face value. Just like CNN feeding fear and greed, you can't. So you got to combine it with other factors. So definitely combine it. So I'm telling you right now, without even looking, I bet CNN fear and greed, which one of its components, one of its big components is the bonds versus stocks. And you'll see it's greed, not extreme. And that's because the volatility index has sort of gone up. But I'm just telling you, this is the kind of stuff I'm looking at. And just wanted to show you this and wanted to show you what we're watching in here. So definitely the bond market. Definitely the bullish sentiment. The reason I'm stuttering is one of the stocks we're in just for some reason just started going up after the close. So we're actually in a stock with a bull flag, and now it's all the way up here. So that's pretty good. Pretty excited about that. So, but getting back to it, I look for tells. I'm combining the StockTwits sentiment index with this. I want to show you this because I think it's a huge deal. So on the left is the ES in relation to its 20-period moving average. Now, I don't use the 20 as a support. On the way down, I use price support. But I'm showing this in relation to other indexes. Here's the Russell on the right. Russell's at the 20. The transports were at the 20. They bounced today. The bonds plowing through the 20. The Nikkei under the 20. The Chinese market under the 20, the ES 60 points above it, 80 points above it actually. So you combine that and you combine the bond market selling off and you have the StockTwits sentiment so bullish. That's why I can't chase rallies. That's why on the close, when you saw the market start to rally, I just couldn't believe it. What I mean by that is not to be stubborn and say, oh, you can't go up. What I mean by that, so I'm not going to chase a rally. And as you see what happened on the close, just can't chase a rally. And I didn't. Now, you might have said, why didn't you just go and buy some cheap puts on the close? Well, that was with 1 minute, 30 seconds to go. That's a little unreasonable. And we're already short via hedges. So just keep that in the back of your mind in there. At least that's what I'm seeing right now, is there are negative divergences. Now, I'll give you another divergence. But this might take till the end of the month. 50-50 funds rebalance at the end of the month. They're half bonds, half stocks. What has happened to the S&P? It's gone straight up this month. So just take it in here. Here's October 1st, right here. Right here. So it's gone up about 160 points. What has the bond market done? The 30-year bond. Holy cow, it's gotten destroyed. It's gone down 9 points. How about the TLT, the 20-year? It's gotten destroyed. I'm telling you, if the markets hold up for the next week and the bond market doesn't rally, I think you'll see a big sell-off in the S&P. Now, keep in mind, you might be like, well, why isn't the bond market going to have a massive rally in anticipation? The bond market is a lot bigger. One of the biggest products on the planet. It doesn't move as much on a rebalance. But this is an extreme. So you got extreme bullishness, and you got the S&P over the 20 in relation to things, and you could get a rebalance. So just keep that in mind for next week. So I think it's going to be a big deal. Now, keep in mind, when the S&P rebalances, that's at the very last minute. So that happens on triple witching. But the 50-50 funds, they can start doing it early. So just keep in mind that October 31st is a Thursday. Usually you start seeing it on a Tuesday, the 29th. So just keep that in mind in there. Usually, let me be sure, double check I have the right date. Yeah, usually you see it then. You see it like on the Tuesday and the Wednesday. So just keep that in the back of your mind. That's what we'll be watching. So tomorrow, definitely not chasing rallies, looking to see if the Russell can bounce. If the Russell can bounce from this support on the left, well, then the stocks we're watching, the XBIs, the First Solars, the Baidus can have a bounce as well. Have a great night. Talk to you later. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.